Alright, family. Hey, we're here. Let's get into the news. Another edition of Melanie Got News coming up right away. Enjoy the music. Let's get started. Alright, family. Welcome to another edition of Melanie Economic News. Alright, let's go and get it started. Today is September 17th, 2020, and the time of the recording is 3:58 a.m. just before I get ready to head out to work. Alright, let's get into this economic news. Alright, let's start with the futures, the market futures. S&P futures are down right now in the red, negative 47.25. Dow futures are down in the negative 335 even, 335 points even, alright? The NASDAQ futures are down 181.25 to the negative, alright? The Russell's 2000 futures are down 22.80, alright? Alright, let's keep going here. Alright, the FTSE 100, remember the European and Asian markets are open right now. The European market, the FTSE 100 is down about 55.16 right now. It's fluctuating, okay? So they're operating in the negative. And the Nikkei 225 is down about negative 156.16, alright, points, okay? Alright, get into some cryptos here. The Bitcoin USD, the US dollar, the Bitcoin US dollar is down, running negative at about 73.25 to about $10,898.03. All right. CMC crypto is running up about $3.90. Okay. All right. Look at the 10-year bond. The 10-year bond is running at about 0.6870. The VIX is up about 2.14 to about 28 even. Okay, some of the currencies, the GBP to the US dollar is running at a negative right now at about 0.0021. Okay, the US dollar to the Japanese yen is running negative about 0.167, okay, and fluctuating. Alright, the euro to the US dollar is running at a negative 2 to about 0.002 cents, okay. Alright, less than a penny, okay. So to about a euro to US dollar is about 1.1793. Okay, crude oil is running down by negative 37 cents to about $39.79, okay. Alright. Now, most people seem to kind of forget, and we're gonna continue to beat this horse that while we're asleep and some of us are ready to go to work, the Asian and European markets are open. So I'm going to turn the camera around, let you see what I'm looking at here, family. This is provided by Kitco.com. Okay, that's Kitco.com. If you look at the spot price of the markets, of the five precious metals market, you see the New York spot price is closed. Here in the U.S., that means the U.S. markets are closed. But if we skip down here a little bit, you see the London Fix. Alright, they're open, and you see here the sorry about that, the US, this is the historical, click here for the historical London Fix. This is what the London Fix is representing of precious metals, currencies. Alright, and then you see right here, world spot price, Asian and European markets, alright, and New York markets. The market is open, okay? This is for the spot price to go, but the Asian and European markets are open. Some New York overnight traders are open, but for the most part, the New York and we're here asleep and the markets are closed, but the Asian and European markets are good to go in there working it. All right. So if we take a look at here, you can see the the asking bid for an ounce of gold in dollar terms is $1,093.90. Silver $26.90. Platinum $940. Palladium $2,499, and rhodium $13,600. Alright, I wouldn't mind getting my hand on some rhodium. Alright. So let's get into some news. Okay, the first story comes from Kitco.com. I'm sorry, ZeroHedge.com. All right, foreigners dump record 54 billion in corporate debt as Japan Treasury holdings surge to all-time highs. All right, there's some funny style business going on with Japan right now, family. Just do your research and look into it, okay? All right, foreigners resume selling long-term U.S. Treasuries in July, offloading 22.8 billion after buying 28.9 billion in June. Yet another spending spree led by foreign officials' instructions, i.e., central banks, the SFW, and the reserve managers, who sold 20.7 billion in July, as well as another 2.1 billion in private holdings. All right, bringing their selling to 22 of the past 23 months. All right. Additionally, foreigners' net buying of equities eased to 16 billion in July from 28.5 billion in June. That is more than double of what they've stopped buying. All right. Foreigners' net buying of equity debt of agency debt also dipped to 34.4 billion from 38 billion. All right, so foreigners are dumping U.S. Treasuries left and right, family. That means something that if you don't see the writing on the wall, something big is coming down. People are dumping. I call it the de-dollarization of the world. All right. Between the record dump and the record issuance of corporate debt in the primary market, one almost wonders where corporate bonds would be trading if the Fed wasn't backstopping them. In any case, aside from the record corporate bond in liquidation, total foreign holdings were relatively stable, as a far cry from the record selling in March and April, when everything kicked out. All right. Looking for individual countries, China continued to sell U.S. paper. They've been dumping U.S. Treasuries left and right. All right. In July, selling another 1 billion to bring its total to 1.073 trillion, the lowest since April, and the latest continuation of China dumping U.S. Treasuries. The de-dollarization of the world is in full swing. The U.S., for all intents and purposes, has lost the status of the world's reserve currency. All right. On the other end of the spectrum, Japan, which surpassed China as the largest U.S. creditor last year, continued to buy treasuries, adding 31.6 billion in July, the most since February, bringing a total record 1.293 trillion. All right. Some other notables include Belgium, whose 211.9 billion were decreased by 6.8 billion. The Cayman Islands, traditionally a proxy for hedge funds, that means people take their money when they want to avoid taxes, they go to the Cayman Islands. All right, held 212.9 billion, a decrease from 9.1 billion from last month, while Saudi Arabia took its 124.6 billion in Treasury holdings to holding 0.3 billion from last month. All right. If you read the overall, but the big trend of de-dollarization continues. All right. That's from the article itself. All right. So the de-dollarization of the world is continuing at a record pace. All right. When the chickens will finally come home to roost for this nation that we own. All right. And when people lose, and when look up the status of the last countries who lost the world's reserve currency status, find out what happened to their people. All right, they had to revert to a domestic dollar. All right. All right. And this next story here, the little short story, this goes into a bigger one. All right. Banks. Most banks will resume layoffs. All right. This is coming from thebondbuyer.com, okay? Thebondbuyer.com. All right, St. Petersburg-based Raymond James plans to lay off hundreds of employees, matching a trend among banks as the coronavirus pandemic continues. It downsized influence on the economy and earnings. About 500 of its 13,900 employees, or 4% of the global workforce, will be impacted, a spokesman said. The cuts were announced Tuesday. All right? This was this past Tuesday, okay? All right? And we'll switch over to www.zax.com, zax.com, okay? All right, this is just in Canada, okay? But this leads into a bigger picture, okay? All right. Canadian banks to resume layoffs to cut costs, boost efficiency. All right. All right. We'll skip down in the article. At the online Scotiabank financial summit on Wednesday, some of the biggest Canadian banks, including Bank of Montreal, the Toronto Domain Bank, Canadian Imperial Bank of Commerce, the bank and the Bank of Nova Scotia, came up with a view of cost reduction through job cut planned late last year of early this year, else holding often off on investments. Okay, among the head at the TD Bank expect disciplined expensive management in the current environment. Being Canada's largest digital bank by the number of users, the bank will resume investing in projects that are important for the bank's growth and prospects. All right. All right. Skip down the article a little bit. Okay. Bank of Nova Scotia also plans to cut further cost-cutting actions in its international markets, while CIBC intends to move forward with job cuts past pause due to pandemic. All right. So this is most people, banks around the world are heading down the tubes. Their stocks are being dumped left and right. All right. So these are not the only ones. We'll take a look at it. This article I was looking at here, I gotta retype it in. All right, and these are not the only ones here in the states. We got Wells Fargo. They're planning on layoffs. Deutsche Bank continues layoffs. All across the board, the banks are continue their layoffs. All right. So we're looking at a major collapse of the banking system around the world. We got major investors around the world calling to get out of paper cash. Bank stocks are being dumped left and right. All right. That all spells news and with the current de-dollarization of the world in full effect. Okay. All right. Family, take care of each other. Be safe. And we're starting a new saying here. I've said it once before, but I'm going to continue to say it. Become your own banker. Become your own credit union. Become your own savings and loan bank, okay? Be your own banker, all right? And pay yourself first, all right? What I mean by pay yourself first, take some money after you get your paycheck. For those who are employed, and if you're your own employer, all right? Take some money and pay yourself, okay? Start investing in yourself. Pay yourself first, all right? Take care of each other, family. All right, we'll see you around. Thanks for joining this another Melon Economic News. Let's get it started.